This is an incoming transmission from the Jersey Shore.
This is Financial Insanity with Scott McLean, powered by McLean Advisory Group. Today you'll hear some of the most important financial information and wealth-building techniques available anywhere.
Let's get this party started, huh?
Do you have a question for Scott and the team?
Am I on the air?
609-488-4646. That's 609-488-4646.
We'll get that information to them by radio.
Now, Financial Insanity with Scott McLean.
There's a lot going on. Inflation, down economy, higher taxes down the road, continuing to feed onto feelings of uncertainty for everybody, but especially baby boomers who are about to retire or maybe are already retired. Can you afford to retire? How can you avoid more losses in your 401k? What options do you have for income in retirement? Scott, you got to help us, my man. Scott here on today's Financial Insanity, out-of-the-box thinking for your financial sanity. Thank you so much for joining us. And today we're going to spend some time answering some of those big questions right now about retirement savings and what options people have. So first off, Scott, with inflation running so high and my investments doing poorly, I'm worried I won't be able to afford to retire. Scott, what should I do?
Well, what should you do is immediately, number one, I'm glad you asked the question, what should you do? Because a lot of people are sitting back and they're doing nothing. So number one, what should you do? Be aware. Number two, and then understand, how does it affect your investing? Not only your investing for old money that's been there a while, but new money that you're putting in. If you're still in retirement and you're nearing retirement, are you still putting money in? And when you put that money in those vehicles and when you put those monies out there, what accounts should you put them into? And I get those questions. What should you do with your money? Number one, do something. Number two, what should you do? Maybe get a second opinion or a third opinion, or call our studios and maybe I can help you. I don't know what you have. And frankly, I can't tell you what to do until I know a little bit about people, which would be malpractice on my part. But what I really want to know is, what programs do you have? What vehicles are out there? Where should you put your money? Well, we need to know where it's at. And then, of course, when you plan on time horizon, when do you think you want to retire? And so that is really important. Where do we put my money if you're in or nearing retirement? The second type of person, Alex, or people that we're talking to, you right there that I'm talking, that's right, I'm looking at you right now, or in the mind's eye of your wallet. If you're in retirement, and obviously if you're on a fixed income, what should you do right now? And this is not a time to sit on your laurels and take a nap. Yeah, so please don't take a nap, because taking a nap could make it worse. And what if you don't wake up from a nap and you get sleep apnea and you fall asleep forever? All right, does not take a nap. So I'm trying to make it light, Alex, but we are in a time that when I got in the business in 1982, licensed in 83, inflation was slowly taking off. And most of us know that are listening to the radio right now. If you're listening, you remember those times when CDs, Alex, you're too young, but your parents know this. But when CDs were at an all-time high in the late 80s that are almost 17%. That's right, 17, 18%. Treasuries were paying 13 3/4. Are the vehicles out there? So what should you do? Do something. What should you do? Get another opinion, or maybe if someone's not, bring it up. And then, of course, look at your portfolio. Maybe you need to make some changes in that portfolio, some radical changes based on how you review your portfolio.
Well, and Scott, let's talk about something specifically there, because for people who are saving for retirement, it's been maybe a little bit rough, and you don't want people to necessarily overreact, but how can I avoid having more losses in my 401k? Anything I can do?
So whether it's a 401k, a 403b, 401a, whatever those qualified plans are, I'd like you to take, number one, a look at your portfolio. Take a look at the portfolio and look at the investment options. Most of us older folks were trained to say, well, let's go to bonds because bonds are safe. Well, what's the definition of safe? No, I didn't say bomb, B-O-M-B, bomb, because bonds could bomb. I didn't say bomb, I said bond. So interest rates go up, bond goes down. Now, the question is, if you're in bonds or bond funds, which I've seen many portfolios, I'm saying, why doesn't the advisor wake up these people unless you're in individual bonds and have a return, a steady return that they're promising, and a short-term duration? When do they mature? This is really important if you have individual bonds. Now I say that because a lot of people think they're in the safe bonds, but they could be in bond funds versus individual bonds, and there's a huge difference. So again, if you're in a 401k, 403b, 457, any type of qualified account, I want you to see if there's what's called a fixed guaranteed bucket. Maybe it's a stable value bucket. This may be a statement I say, zero could be your hero. In other words, if the market continues to drop, and it's been jumping up and down like a Dunkin' yo-yo, but the question is, in these vehicles called the guaranteed type funds or the stable value funds, or a fund, maybe it's in a fixed fund, these could be very, very critical, wonderful tools, but we need to ask you more questions. What is it invested in? So again, as I mentioned before, people always pop by and say, what's going on? How can I help me? How can Scott help me? Please, as Alex said, what do? Take action. Don't put this aside. So if you have the 401ks, 403bs, even IRAs, they probably need I call it an autopsy review. An autopsy review. Could they be dying? Let's get them before they die, because we need to have that review.
And Scott, and for folks, if they do have questions, that number 609-488-4646. But you mentioned something there, as we talk a lot about 401ks, but there's also the 403bs out there. And what happens if something happens to me? I mean, is there some sort of lump sum payout for my spouse possibly?
There could be in a 403b or a 401k, because they're similar. 403b, for those people who know the difference between a 403b and a 401k. A 403b is like a nonprofit organization, similar to a hospital or a school, college. A 401k is built for companies who make money or that's profit motivated, but the tools work almost identical. They just have a different number there, 401k, 403b. So lump sum payouts. Now, there's some vehicles, if you're about to pick a retirement payout plan, and they call it annuitization. And so if there's a payout plan, before you choose that, you need to find out all of the options in the payout plan, because I've seen people take a lump sum and they'll invest it themselves. But the question is, in a low interest rate environment, that might be smarter than a high interest rate environment. So you've got to weigh the differences. Do not pick and choose and take your portfolio, put it against a wall and throw a dart. That'd be double dumb. But you need to understand a lump sum. Can I reinvest it myself? Can I get a guaranteed rate of return, or can I get a decent rate of return? And the second thing on top of that, picking the returns, is, well, what if I passed away? How much will my children receive if I passed away? And in those choices, in those pension plans, if you choose, let's say, if I die and I take the lump sum, well, hopefully my portfolio lasted. But if I left the company to invest it for me, called a pension plan, or in this case, a 401k with a guaranteed payout for myself, well, what happens to my spouse? Could I choose a different plan? And there's lots of options that you could get tied up in and totally hamstrung, not knowing which to pick what. This is so important in an interest rate economy, or an inflationary economy, plus interest rates just screaming to the roof. The choices could be devastating. Investing for the income, investing for the guarantees, investing for my spouse, or maybe I have a significant others. And then could there be money left over for my kids? Yes or no? And we call this a pension option. And this is where people make the majority of mistakes. They don't make a mistake when they're early because they don't know it, but they can make a huge mistake, a devastational mistake. Like that new word? Devastation. A tremendous mistake, because you chose the wrong plan, and all of a sudden, here you are, and you and your lovely spouse are driving down the road, and some idiot you crash into. Accidents happen. Well, when the accidents happen, the question is if your spouse, or let's say husband and wife, died and they chose the option, there could be zero, nothing, nada, zilch left for the kids. All of that went down the drain. So again, this is nothing you do by yourself. I mean, this is all we do. Now going on our 41st year, this is all we do. And making those choices, it doesn't mean you have to invest with the advisor, but the advisor should be giving you wise, sound counsel, giving you a lot of options, not the options that will benefit the advisor, options that will benefit you, your spouse, and your children. So, Alex, that's a really important point when they're in or heading into retirement, and the choices you make could be wonderful, but you've got to look at all the choices and then weigh them based on what's happening. If you have a question, please, before you buy something like this, 609-488-4646. 609-488-4646.
Scott welcomes you to try that number. Also, if you would rather go to the website, it is simply the phone number with .com at the end. So 609-488-4646.com.
How simple is that?
Pretty darn easy. And you are listening to Financial Insanity, out of the box thinking for your financial sanity. More with Scott coming up.
Hi, this is Bonnie from McLean Advisory Group, wishing you comfort, hope, and joy. Happy holidays. Thanks for listening.
Who likes uncertainty? Wall Street certainly does not. With near record inflation and partisan politics, there's a lot of uncertainty right now. What will America's future look like? What will your future look like? Will your taxes go up? Will your savings go down? For more than 40 years here in the Jersey Shore area, Scott McLean and the team at McLean Advisory Group have seen uncertainty come and go. No matter what the future holds, Scott can help you create a plan designed to preserve your finances in uncertain times. And it's not a matter of if those uncertain times will show up, but when. Call 609-488-4646 now to meet with Scott McLean and the team at McLean Advisory Group. If uncertainty is causing you to feel insecure, Scott McLean might be able to help. Call 609-488-4646 and schedule your visit today. Again, that's 609-488-4646. Investment advice is offered through Bell Point Asset Management, LLC. Investing involves risk, including the potential loss of principal. We made it back. This is Financial Insanity with Scott McLean, presented by McLean Advisory Group.
No surprise, inflation emerging as a top concern for people preparing for retirement. CNBC saying 71% of retirement age investors worried inflation could have a negative impact on their savings. It's a fair and real concern. What do you think about it, Scott?
Reagan, 1980. Inflation is as violent as a mugger and frightening as an armed robber and as deadly as a hitman. I'll never forget that statement. Frankly, when I put it in my book, it's trap number 3 on the 3 blind mice. You know, in inflation, we just came out of a period of time when you're coming out of a period of time with low inflation. Money is flowing like the streams in the Hudson River. And it's almost amazing that now people, when you think about inflation, at first they don't feel it. It comes on very silently. And then, like a time bomb, it blows up. And we've seen that time and time again. I remember buying gas at the gas station. Many of you listening right now, I'm your age, probably you're like maybe a little bit older. The odd even days. Remember that? I remember having, because my bad habit was water skiing, having to take the license plate off of a friend's car, stick it on their car just to go water skiing. I know that's probably wrong. I just had to make it happen. But inflation's like a thief in the night, and it shows up. And when it shows up, it could be totally, totally disastrous. I can't imagine people today on a fixed income, whether they're in retirement, and now they have to go buy some eggs. Instead of buying a dozen eggs, maybe they buy a half a dozen, or maybe they have to split meals. I feel it. I see it. I I just feel for people. And man, if their investments are on the wrong spot, this could be a nightmare, especially if the stock market is dropping and then inflation's going up. You're getting a double whammy. I call it the Muhammad Ali left-right hook. And I think that's important. So, Alex, I'm not sure if you've ever studied Economics 101. I mean, heck, that class will put you to sleep faster than the strongest sleeping pills. But I think inflation really, however, causes the biggest distortion. And why is it? The printing of money. They kept printing, and everybody loves those checks, don't we? That free money. Well, free is now coming at a cost. Inflation. It's a deadly silent killer, the thief in the night.
Pandemic has had an effect on how people are preparing for retirement, how they think about it. And we had a poll here we looked at, personal capital poll conducted by Qualtrics, and it said 1/3 of the respondents there say the pandemic's convinced them that they'll need a larger nest egg for retirement. 36% saying the pandemic has lowered their anticipated standard of living. Are you seeing similar trends with people you're working with?
I am, especially for clients that we have. Luckily, we've been speaking about it. Doesn't mean we have the know-all, end-all answer. The question is we have to take maneuvers in the portfolio, perhaps shifting from the G, the growth investments, to the I, the income, living off the dividends and interest. Obviously, as the nest egg starts to dwindle, people are getting really, really nervous. And I did a workshop, Alex, just the last week. I think it was on a Thursday night, and I said, let's just flip the roles right now. You are the financial advisor. I'm your client. The stock market ate $100,000 of my money. In other words, the market went down. I lost $100,000. Do you want to call me? This is where I think in the financial industry, a lot of people are not calling their people. Maybe they're tucking their tail and hiding. And this is a time not to be really relaxed and tuck your head in the sand, because nothing else is exposed but your vitals. You got to be on the alert. And just today, meeting with the lovely client and his wife, beautiful people, and their advisor never called them in the past couple of years, maybe once a year. I'm not really educating. They said, we don't even know what we have. I think this is important. Now, when you throw inflation in the picture, mathematically, this could be totally disastrous. So again, really, really paying attention to what they have. And I think what's important, Alex, is this is not the time to set back when inflation is rampant. Heck, it's easier to print money than ever, which the government's doing, which they were, rather than issuing bonds, paying off debt. They just print money. I think what's happening, you're going to start seeing credit card debt escalate. You're going to see more violence, which unfortunately I don't want to talk about, but it could be getting worse. People just want to cover their family. Inflation is a very, very, very disastrous, as I say in the beginning, a thief in the night, and people should be concerned about it, pay attention to it, and watch their money. Don't just go out and blow it.
If you have concerns, you have questions about inflation, anything else, you can call Scott. That number, 609-488-4646, 609-488-4646. Now, people, if they're worried, they think they might need a bigger nest egg, whether it's the pandemic, inflation, whatever it is, it's got them thinking about it. What's the first step to really analyze and look at and see, how am I doing?
Two areas. When you're looking at your portfolio, if you're out there right now, and give you some homework to look at, because regardless of what, inflation really causes distortions in your financial plan. And when you think about it, look at two areas. Number one, look at the bottom right-hand side of your portfolio. What's it at? Just today, I was looking at a portfolio of a client, and my goodness, he came in, and him and this lovely lady, and the account's down almost $50,000. I said, when the advisor called you, what did they say? Well, they haven't called me yet. I said, well, it's been now several months. Have they called you in the past half a year? No, they haven't. So number one, pay attention to what the number is on a quarterly basis. Don't be over panicking, but if they're not calling you, get somebody there. Number two, look at the amount of units you have. So if you've got dividends to reinvest, you're building up more shares of stock. This could be a great thing. maybe for people who want more income, maybe they turn on the dividends and don't touch the principal. In other words, don't touch the basis, the shares of stock, just turn on the dividends to maybe help the inflation not be as challenging. For example, if I'm getting, let's say, a 5% dividend from a lovely preferred or maybe REIT, BDC, MLP, some type of investment, and I'm getting that dividend, rather than reinvest it, maybe take it out now. Maybe some of you out, so you need a little extra money, you're afraid to burn down your account because you've seen your account values drop in a stock market that's dropping perhaps. Well, just turn on the dividends. And if you don't have a dividend portfolio, Alex, the two things to look for, as you just asked me, number one, look at the account values. And number two, are we getting more shares of stock? If you are, maybe turn off the dividend to reinvest and take out the dividends. But this is really, really another way to help kind of fight for inflation or fight it off the best we can. And I think this is really, really important for those of us that are worried about your portfolio dropping.
And Scott, we can't predict the future. That's just how it is. In the pandemic, inflation, the only thing we can predict is that things are going to be unpredictable. And it's a little uncomfortable because people want to know what's coming next. But really, Scott, it's just important to know that there's going to be things coming your way. Maybe it's in your personal life. Maybe it's global. Who knows? But there are going to be things that happen that maybe make things more difficult, or at least are challenges that you didn't foresee. And so it is important, though, to have people in your corner that know what they're doing, been through this before. And, it's just the kind of thing that you don't want to assume anything. These are important decisions, and there's a lot to consider.
There's a lot going on right now. There's no doubt there's a lot to consider. You buy a bottle of wine, it's $100. Bottle of wine, and the cheese costs $5. For pretty soon you can't have the cheese, and then the wine goes up to $1.05, $105. Well, your money's being eroding with inflation. So again, like you say, we can see it. If anybody can't see it, they've got blinders on, and that needs to be really, really discussed.
And Scott, how can people get a hold of you? They have questions. I know you're somebody who can be a resource for folks.
They're free to give our studios a call anytime. Bonnie, Sally, Patty, George, they can make sure they get a hold of somebody here. We've got a great staff. But if you've got questions, I'm sure we have answers for you, or try to do our best. 609-488-4646. Real easy phone number. We have it. By the way, that's our website, 609-488-4646. If you put .com, you'll go right to our website. That could be helpful for people if they want to take a look at our firm. Maybe you're new in the area. Maybe you just moved down. The pandemic you brought up a little earlier in the show. People were moving out of North Jersey, out of Philadelphia, out of New York, and coming down to the beautiful, beautiful Jersey Shore right down here in our backyard, the Long Beach Island, and of course, a beautiful area. 609-488-46. I'd love to help you.
Workshops, educational opportunities. If I'm somebody, I hear you talking about holding these, how could I look at that calendar or get involved if I wanted to attend one of those?
Well, that's amazing. You said that, as our website is up there at our phone numbers I mentioned, 609-488-4646. But it goes right to our website. And we do hold several different workshops, and they should be placed there. Or perhaps the best person, if you want to know the most upcoming workshop, whether it's a whatever education workshop we're doing, whether it's a Zoom, which I don't like. I'd love to see people's beautiful smiling faces.
Of course.
Or you can actually come to our workshops, live workshops. You want to ask for Bonnie. Bonnie is helping me out. She handles all the client relationships, our meetings, whether it's a one-on-one or in a group session. I think people love to come out, sit down, understand whether it's a wine and cheese party we have at our office we used to have before pre-COVID, or maybe we just have it at the library. You can check our website out for the events. And if they're not on there on the events, you just simply get get in touch with Bonnie at our office.
Easily accessible, and Bonnie, a great resource for you and great person there to lead you in the right direction if you need any extra assistance as you kind of start navigating there. We're talking about educating people and answering questions, but another thing that's important, Scott, and you mentioned, is getting that maybe second or third opinion also. So maybe you have a current advisor, somebody that you're working with, but just getting some different eyes and ears on a situation can be helpful.
It would. I think one thing is, you don't know what you don't know, which in my book I talked about in the Three Blind Mice, and I'd love to get that in anybody's hands. They pop by their office. But I think what I found is, I guarantee if you had a stomach ache, which a client of ours did have, and they kept putting it off, and doctor said, take this medication. 6 months later, they've got cancer throughout their entire body because they didn't get a second opinion. But it was the same problem. Well, I'm not saying that I want anybody to have cancer. That's how both my parents passed away. But financial cancer can be as disastrous as ever when you can't afford things and you have to lifestyle changes. I think this is why it's critical. You get a second, maybe a third opinion. This is why I think anybody that comes into a financial advisor's office and does business for the first time right off the bat, or goes to the bank and does business, take the money. I think, I call it down in Southern language, double dumb. It'd be like Colonel Sanders babysitting your pet chicken because, frankly, you need to understand everything that's going on. And if they take more time focusing on getting your money, not focusing on the full person, on holistically, not simplistically, you're in trouble. So you definitely need a second or third opinion. I can tell you that's critical, whether it's financial or health or anything. I think it's really important.
To get answers to your questions, 609-488-4646. More Financial Insanity with Scott McLean coming up.
Hey, this is Scott McLean. I want to wish you guys a tremendous, wonderful holiday. Merry Christmas, Happy Hanukkah, and all the lovely greetings we have for you. Proud to be in your life as we try to give you the financial information so you don't go insane. Happy holidays.
It's nice when you get everything on your list in one place, isn't it? Scott McLean from McLean Advisory Group agrees. That's why he offers comprehensive retirement planning all under one roof. You shouldn't have to go one place for tax planning, another for estate planning, and another for retirement income planning. That's why McLean Advisory Group was started. Scott wanted to build a company that could help families with all aspects of their retirement planning. McLean Advisory Group is more than just convenient. They're knowledgeable and experienced. And for answers for your questions, you can set up a meeting with Scott and his team to talk about your retirement. 609-488-4646. That's 609-488-4646. Use the same number to reach the team online. 609-488-4646.com. Investment advisory services are offered through Bell Point Asset Management, LLC. Firm offers insurance services but does not provide tax or legal advice.
I'm on the fence about a real tree. I've done the real tree. When you have that fake one that's in 3 different pieces, you just bust it out every year and you take a second and it's already got the lights attached to plug it in and boom.
I do like the smell. I do like the smell of those Christmas trees.
Yeah, but you can get that smell, in different ways. But anyway.
We made it back. This is Financial Insanity with Scott McLean, presented by McLean Advisory Group.
2 out of 3 men underestimate life expectancy of the average 65-year-old man. Half of women underestimate the life expectancy of the average 65-year-old woman. Might not seem like a huge deal if you can't get a trivia question right on life expectancy, but can mean a big problem when you start to factor in the dollars, Scott.
Yeah. Well, I was thinking about life expectancy before COVID was 78 years, 79 years old, and current expectancy, I think it was 2021, was 72, almost 73. And so if you go back a time, this Adam and Eve deal, I think the curse was women are going to outlive men usually. I don't know if that's part of the Bible or not, but I do know is life expectancy. We're living a little bit longer than we used to. And when you live a little bit longer, you want to make sure you don't run out of money before you run out of life. And that's a big, big concern.
Scott, what's really the impact here? We underestimate our lifespan. Why can that be such a big deal?
In my family versus other families, I like to find out how, which isn't a real science, but in my family, the grandma died at 84 and 86. My mom and dad passed away at 74 and 75. But of course, in those generations, they smoke a lot and they drank a lot. So I tried to stay away from that. I love life. Of course, we don't know how long we're going to live. When you tier that up with your investments, they call it the rule of 4, how long will your money last? You figure $100,000 at 4%, $4,000 a year. You look at numbers and pension options. I like to tie that in to life expectancy. Example, a husband and wife, they both get Social Security. But what if one passes away? Well, they get the higher of the two, but there's a big piece that just got lost in their budget. Life expectancy. Does that mean you got to move in with your kids? Or maybe your kids move in with you? Life expectancy. So this needs to be put in the calculations of financial planning, especially when you're choosing your pension options. I don't know if that's where you want me to go, Alex, but I'm just thinking about life expectancy. We're living a lot longer than we used to. They got all sorts of medicines out there, new stuff to keep us around. They give us the $6 million man. Many of you are $6 million men, $6 million women with the new knees, new shoulders, new hearts, new parts. I guess that world came alive. But the longer we live, the more we're going to burn down our cash, which is why in the financial world, Alex, thinking about life expectancy, living on the I versus the G. The I, income producing assets that will give you a nice something you can bank on. On the first of the month, there's a check shows up in your mailbox, or perhaps now automatically in your checking account. But the G, the growth equals shrinkage. Can we depend on that? And so I think life expectancy has a lot to do about your financial planning in light of my family. They died young, but what if I live to 100? Did I plan that? And so I think that's really, really critical. Matter of fact, I remember taking a test on the on FINRA and of course the SEC when you get your testing, and they say, what's the life expectancy? How should you plan? Now they're saying about 100 to 105. So even though none of my family lived that long, that could be really, really an amazing number. Life expectancy. What happens if your spouse passes? What does your numbers look like? Did they keep the pension, not the pension? We're living a lot longer these days, and one mistake could really affect your lifestyle.
Scott McLean, McLean Tax Advisory, 609-488-4646. If you have questions, Scott can try to answer those. And we talked a lot about inflation last segment. Retirement could last 20, 30 years. What's going to happen with inflation over that time?
Look at Venezuela. Venezuela got destroyed. If you go about inflation, it not only reduces the nest egg very rapidly, it also eats away at your current savings very rapidly. And I think what people don't understand, they do understand that, I think people now, but the younger generation, and I say my age is 60 plus, but you take a kid today that's 5, 6, 7, 8 years old, they don't understand that. They will later on in life. Great teaching tool. We spoke about one of our segments we spoke about in our radio shows is it's a great teaching tool for the kids right now, even though maybe you're fighting through it. And you think about the value of $1. Look at the price of these daggum cars. These used cars are more money than if you have a leased car. You know this, Alex, if you have a leased car with inflation, you're turning the car back in. They're like, they want your car. They're going to beg for you to take it back. Inflation has a way of really hitting it. And then, of course, our last thing we just spoke about, if we're living a lot longer, it could be really disastrous. I don't know if that answers your question or not, Alex, but I think people know that for life. And that's why people need to really pay attention, as we spoke about, to the bottom line of their investments and how can they preserve them, living on the income versus the growth. And that's why I think when people, they call us all the time, ask questions, or they come in, our clients, we need to pay attention to that more and more often. And it's not like putting your finger in the dike because another one's going to pop out, another hole's going to pop out. This is not a set it and forget it, pocket peel type of deal. This is important when we talk about this area.
And Scott, look at how much your parents paid for their first house versus how much it would be for you to get a new truck today.
Yeah.
I mean,
we talk about unexpected things that happen. A little earlier, when you asked me some questions, I'm thinking about the truck. Denise and Maggie are coming back, my wife and daughter, from Ocala, from competing in the World Equestrian Center. And they're coming back April to, I think it was 2022. They're coming back. And I think you saw some pictures where the wheel of a car from the other side of the 295 Beltway in Virginia flew off the car. They're going one way. My daughter and wife are heading north. Thank goodness my daughter was driving, slouching down in the truck, and the wheel hit the windshield and ripped off the entire roof of my 3500 Ram. Now, if you see pictures, that's unexpected. What if God took them home? Well, I know they're going to heaven. I have no doubt about that. 1 John 5:13 is real clear on that. I'm okay with that. The concern to me was the unexpected challenges. You know, that new truck, they gave me all my money back. I paid for the truck, but these new trucks, I'm going to wait. They're so expensive.
Yeah.
Frankly, the price of a truck today is the price of my first house in Ocean Gate, New Jersey, where I paid $42,500. It was a duplex. And I was just praying the tenant above us would pay their bill to help me pay my 13.5% mortgage, interest rate mortgage. So that consumer price index, keep your eye on that deal because that's a good measure of inflation.
Scott, how can we create an inflation-adjusted spending plan for our retirement?
That's a great question.
Isn't it?
If you're looking at that now, I think number one is the biggest cuss word I have ever heard when it comes to finance is the B word, the budget.
Yep.
Really, nobody, if you're making fat money, you're doing real well, you're rolling and doing, and you're just doing wonder, and then all of a sudden you retire, and now you're on a fixed budget. My goodness, I want the people I work with, I'd love them to do a budget 6 months before they retire and practice on that. Because if you're living, let's say, on $70,000 a year, and now you're on a fixed budget living on $40,000 a year, it's a lot of money, let alone having to turn the engine off from working, getting up at 5 a.m. and getting home at 5 p.m. If some of you guys that work like I do, well, that engine gets turned off. A lot of things are challenging in life. So the first thing, Alex, is the budget. The second thing is, how are you pulling money out of your investments to make the difference? Which is, do you take Social Security now? I get a lot of questions out of almost 570 different ways to take Social Security. Way number one versus the second way could be over $100,000 over a lifetime by choosing the wrong option. So paying attention to Social Security. And then on top of that, how do you look at this? Well, your pension options. Are you doing the pension optimization? People call us at our studios if they want. If you're having a pension, you're about to choose a pension. If you want to give a shout at our radio station about your pension options, 609-488-4646, because those pension options could really throw you off. And when you tier the pension options, when you're fighting inflation with Social Security, again, another challenge. So if you have that, I'd love to try to help anybody listening right now, 609-488-4646. We can guide you through that quagmire of just so many decisions. And then when you tier it up with your own personal IRAs or your 401ks, 403bs, along with your savings, again, it goes back to the cuss word. What was that cuss word?
Budget. Yep.
The budget. So
nobody wants to hear that.
I think, Alex, I don't mean to be so simplistic. It goes back to keeping things simple But at this time, pay attention to the bottom line, pay attention to the units of shares of investments you have, pay attention to the cost of living, which you're doing that, and it's going up so rapidly as it did in other countries, and people never thought it would. This is why it's so practical and very important to talk about it, at least on a yearly basis with your advisor. If you've got an advisor out there, hopefully he or she's bringing this up to you and not waiting for you to bring it up to them, but bring it up anywhere. They need to ask those questions. That's important.
Well, Scott, and you don't want to have those three blind mice. You're somebody. Well, not to be funny necessarily. I do realize dropping that in there, but that right. Heck, you're somebody who knows these different areas, and you can speak to these different concerns. And so it's not just inflation. There's other things that people got to be concerned about or considering as they're looking into retirement. And I think that you have a good idea of what those different things are and how you can kind of guide someone through those different steps.
Yeah, I actually put in our if you've got our book, if you'd like to make sure you get a hold of it, I'd love to help you with that. I talk about inflation on chapter number 3. We spoke about that a while back, and that's page. If you got the book with you might want to pull it out. If you've been here, I know a lot of people have been here. We were the number 7 top Amazon hit in when COVID came out. I couldn't do my tour, but then we spoke about in trap number 5, which is really, really important. Is of course I call the 3 blind mice misses by miles. These are mistakes when people plan for their retirement and they really don't look over maybe history, how history can repeat itself more often than not. Could this, the time we're in right now, be the 3rd drop? Usually in the market, over 200 years of market history, there's 3 or more drops in a cycle. The 3rd's the worst. We haven't had the 3rd, and I surely don't want the 3rd. When we look at the cycles of time, I put on page 97. If you got the book, definitely get a hold. By the way, I don't know if I'm allowed to do this, but if they want that, we can email them a copy of these chapters, Alex, if they want. No cost, no obligation. I'll be happy to do that. Actually, I just said Bonnie would be happy to do that. I'll just tell her what to do. But I think these are great historical lessons you can learn on inflation, the mice traps, and the hidden costs that can really rob you blind. I call it mouse trap number 6, the hidden costs that could rob you blind. I think that's really important. So if anybody would like to get a hold of that, I'd definitely make it available. 609-488-4646. No cost, no obligation. I'm not trying to sell anything. I want you to, as I said in every one of our workshops, I want you to be informed. And then being informed is one thing, but when you're informed, you need to do one more thing. That's called take action. But if you don't take action, it's almost like a deer in the headlights, and then you're going to end up in a wreck.
Final segment with Scott McLean coming up. That number again, 609-488-4646. If you have questions for Scott, you can also visit his website, 609-488-4646.com. All right, well, everybody's got questions. I've got questions. You've got questions. And coming up next, Scott's going to be answering these questions. It's the mailbag segment coming up. This is Alex Dingman of Financial Insanity with Scott McLean, wishing you a happy holidays. I hope you have good health and get everything on your wish list. Thanks for listening.
Who likes uncertainty? Wall Street certainly does not. With near record inflation and partisan politics, there's a lot of uncertainty right now. What will America's future look like? What will your future look like? Will your taxes go up? Will your savings go down? For more than 40 years here in the Jersey Shore area, Scott McLean and the team at McLean Advisory Group have seen uncertainty come and go. No matter what the future holds, Scott can help you create a plan designed to preserve your finances in uncertain times. And it's not a matter of if those uncertain times will show up, but when. Call 609-488-4646 now to meet with Scott McLean and the team at McLean Advisory Group. If uncertainty is causing you to feel insecure, Scott McLean might be able to help. Call 609-488-4646 and schedule your visit today. Again, that's 609-488-4646. Investment advice is offered through Bell Point Asset Management, LLC. Investing involves risk, including the potential loss of principal.
Now time for one of our funnest segments. We really enjoy this, getting questions from the audience. Scott, I know you're ready for our mailbag segment. You're listening to Financial Insanity. And if you hear something and it raises an idea, concern, something you may have, 609-488-4646 is the number, 609-488-4646. And Scott, let's just jump right into it here, my friend. Here's the first question. This person's worked at the same company for 25 years. They had a 401k there. That's great. But a big merger, and now I'm not sure how to track down that account. I've definitely heard of this happening before. What tips do you have for Scott for trying to seek out that old 401k?
Wow. Well, first of all, they should have a statement at least once a month, if not once a quarter, for the statements of the 401k. If they've been there for 25 years, I can tell you they've been either not paying attention to statements, or maybe they checked off a box on their investment to make it all email, but they need to call the HR department. Of course, based on the big merger, you want to see if there's any stock options. Did they have any stock options? Were they there before the company? Obviously, you've been there for 25 years. There might be some options there. And so you need to go to the HR department, then over the investment department, ask them, of course, where's the money? Maybe it's payroll. Maybe it's that simple, but it's being real proactive. And if you start hearing the rumbling in the street, make sure you get your affairs in order, and then have a meeting with someone, with an advisor who can look at holistically their investments. And if they got laid off, not laid off, there's going to be a buyout. What's going to happen? This is a lot of questions there. That's a huge question on just one simple question, but it's really, really big. And I think you're going to hear, based on the economy, how it's going, you're going to hear about perhaps layoffs. Like when I was a young kid in the 80s, they call it age discrimination. Well, now they can just go ahead and get rid of the old people because they have it contractually. So this is really important. You pay attention to your investments, your dollars, and again, where are they to make good money?
That's great, Scott. All right, another question here. This person says they've done a pretty good job keeping track of that dreaded B word, the budget, and finances during adult life. But, important question here, why is it so important to have someone else do this budgeting for you in retirement?
You know, everybody who wants to win in sports and goes into competition, they're not their own coach. They've got to get a coach. And so you might be overlooking things, maybe overseeing that how you're working out, how you throw the football, how you hit the golf ball. They need a coach. When it comes to investment, this is really, really challenging when you try to do it yourself, you run the budget. And if you go meet with an investment advisor who's done this for many, many years, they've seen people make good mistakes and bad mistakes. There are good mistakes. You can correct things, obviously. At least you tried. But there's no do-overs in retirement. So having another set of eyes is almost like, it's almost like when I was looking for my keys the other day, and my wife said, I said, where's my keys? Where'd you put my keys? Scott, look on the table. I'm looking on the table. Scott, are you looking on the table? Look to your left. I'm looking to my left. Now, obviously, I was in a hurry. I need to get out. But she said, she came over to me. She grabbed my hand kindly and very calmly, luckily. A scotoma is something you don't see, even though it's right in front of you. This is why people need another fresh set of eyes, because there are no do-overs in retirement, and one mistake could cost you hundreds and hundreds of thousands of dollars, especially in choosing your Social Security and then choosing the right investment options. Alex, next.
Why are women so much better at finding things? It's not a question that's been sent in, but it's just true. It's just
more
true.
Patient.
And we are going over some mailbag questions today. If you have questions, the number 609-488-4646, 609-488-4646. Add.com for the website. Scott McLean, Financial Insanity, out of the box thinking for your financial sanity. Another question here, Scott. What is your best advice for someone who maybe is 10 years away from retirement and doesn't want to make any big financial mistakes? Huge time here. If it was football, that'd be the red zone, I would think, for your
Boy,
retirement.
that's a great thought. 10 years. Most people come in the last 6 months or last 3 months.
I'm retiring next week, Scott. What should I do?
Exactly right. So for those people that are in or near, I should say, nearing retirement, congratulations if you're 10 years away thinking about it. Number one, pay attention to taxes. Pay attention to taxes. How can I increase my savings? Pay attention to investing, shifting from the G to the I. TR equals G plus I. TR, total return, equals growth plus interest. The goal is shifting your assets to a more of an income play so you can live on the dividends and interest, not just on the growth. You can't spend growth. We spoke about that early in the segment. You can't spend growth, but you can spend the dividends and interest. 10 years away is a long time. Where do I put my money? Should I focus on a Roth IRAs as well as my 401k? Should I, if my spouse is retired, should I go ahead and continue funding my spouse's retirement? How much liquid cash do I need so when I retire, I have enough liquidity? And then I think the big cuss word most of the seniors or those becoming seniors like myself, here's a cuss word I think you need to memorize. It starts with the capital N and then the capital O. When people keep borrowing money from you, your kids keep coming to the well, perhaps you need to say no. And then I tell our clients, just tell them, my financial guy said I can't do it. Blame someone. I mean, when my daughter used to want to go out and date a couple of guys, and she goes, "Dad, I really don't like that guy." I said, "Well, just tell him to come talk to me, and I'll help you out, honey. Use somebody else to help you out of that situation if you can't say no, because that's the biggest. We never know when we need extra cash. It could be the money is for you and your spouse if you're married. Then it's for your livelihood, then it's for your fun enjoyment. So the go-go years, it goes as slow-go years, and maybe you can start giving it away. But it's about you first, you and your lovely spouse or your charities, but actually you and your family first, taking care of them. This is the biggest challenge I find, because what happens is when you get to that point, focus on your budget. But again, the cuss word, no. Start practicing no, because I can tell you that will start to bleed your money when you go into retirement and you're starting to help your kids. Well, they need it. Well, you're hurting yourself. It could be painful. So be very cautious of that.
If you have questions, the number for Scott, 609-488-4646, 609-488-4646. Just a couple minutes left, Scott, and I just wanted to ask you, if somebody maybe is on the fence about coming in, giving you a holler, what can you tell people about what it's like, the first contacts with you, and maybe that first visit? If somebody wants to come in, maybe if you could just kind of explain what that process is like for folks that maybe are first-time visitors, first-time callers into you.
Well, that's really enjoyable time. I think I encourage people, as Alex, you were saying, give our studios a call, 609-488-4646. Ask for Bonnie. And what will happen is Bonnie will say, okay, great. She'll schedule a time to come in or over the phone. She'll ask you some questions. She'll send you a little questionnaire, not in depth, but just to get to know you. I want to get to know people, whether it's over the phone, via the Zoom, the internet stuff, you can see each other, or coming into the office. We're going to ask lots of questions that surrounding your family, who gets the money, your health, your benefits you have at work, your spouse. Perhaps your spouse passed away. Maybe you have inheritance. We're going to talk about a lot of stuff about you, because it's about who? You. When I hear people going to a financial office and giving that financial guy or gal money for the first time, or going to the bank, to me, they're just double dumb. Why? You need to get to know the whole picture, not just a quick salesman. That drives me absolutely crazy when people come in there and say, well, we got a great product, and they're selling product. It's not about product. It's about, well, we don't need, if we're a carpenter, we don't need a drill and we don't need a bit. We just want that hole. Well, to get the hole, you got to have a drill and bit. I want to know what kind of planning, what kind of personality you are. Is this a good fit for me as well as a good fit for you? It's a two-way street because retirement planning, investment planning is a two-way street. It's got to meet. I need to know your investment strategies. I need to know your investment outlook. I need to understand the good, bad, and ugly you've been through so we can avoid those issues. This is why, whether it's one meeting or two meetings, we don't do business the first one or two meetings ever. We get to know people. This, to me, is very important.
I love it. I just love you framing that up for folks. 609-488-4646. 609-488-4646. This has been another episode of Financial Insanity with Scott McLean. Great show as always, my friend, and I hope you enjoy the rest of your weekend.
All right, you too, my friend, and everybody out there.
This radio program may contain information which has gone regulatory or other significant changes since its original recording. The information and views expressed on today's show is educational in nature and is not intended to be a recommendation for any specific investment, product, strategy, plan, tax, or legal advice. Information presented is believed to be factual and up to date, but we do not guarantee its accuracy. Investment advisory services offered through Sound Income Strategies, LLC, a SEC-registered investment advisory firm. McLean Advisory Group and Sound Income Strategies, LLC, are not associated entities.
This radio show is a paid placement.